Yeah, big man. Can you hear me? Hello, can you hear me? Okay. Femi, can you hear
Are
me
we
now?
live?
Yes, 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 we are live. So I'm sharing the link with my audience. So
Um, can you speak louder? It's a bit.
yeah, I'm sharing the screen with my audience. So where I am is kind of noisy. So I think we should. Okay, we have someone here with us. So let me just share
Okay.
the link. Wow.
Also, how do I present from here?
Whoa. Oh, you want to present? Come on, Hammer. We can only do that via Google Meet, but I doubt if you can do that here on YouTube. So okay,
Uh,
okay. I think we can start. Yeah. So good evening, everyone. Hope we all can hear me, right? So this is our bi-weekly webinar, and we have with us Miss Adeniba, right? So he's going to be educating us on trading. If you're into trading, forex, crypto, or whatever kind of trading, right? He actually does it as a business, right? Into it. At least I know he has been into it for at least I think a decade or more, right? If I'm not wrong, he has been into it for like a decade, right? Since school days. So be pretty sure you're actually going to get a lot in regards to this. Please be rest assured. It's someone I can boast of in the crypto space, right? Regards to knowledge and what he knows. So I'm going to be handing it over to him so that we won't waste our time for him. Can we just help me celebrate Miss me at also share the link so that more people can join us live and can watch on what we have this evening. Yeah, over to you. Over to you, sir. Yes, yes, you are. Yes, you are. Continue.
governed by a tested plan, a measured edge, and a defined excuse me, level of risk. So there are three important things to note in um, this definition. Trading is governed by a tested plan, right? So that means you need to have tested this plan over and over again before you can say, oh, this is the time to trade these assets. This is the time to make profits from this, right? And a measured edge, right? So you need to have a hedge, right? A hedge is the strategy you use that who others are naive of, right? If you do everything others are doing in this financial market, there is a high chance you don't make money or you don't make as much money as you should, right? And then a divine level of risk. So I tell my students, I tell people I mentor that risk management is trading. Trading is risk management. If you are not managing your risks properly, you are not trading right. You are not trading the right way, right? And that means you are gambling, literally. So you need to manage your risks, right? We'll still get there. uh, there's a percentage of risks you should take in order to make the maximum uh, profit from whatever trade you take, right? So you need to have a divine level of risk. So three things now. So I'm going to take the definition again. Trading is a deliberate exchange of capital for asset governed by a tested plan, one, a measured edge, two, and a divine level of risk, right? So like I said, I've traded the forex market, I've traded the crypto markets and the stock market, right? Over the past 12 years, and I there's an aspect of trading, right, that might make you lose a lot of money, right? Especially when it comes to crypto, even stocks, even forex. But I have been more into the crypto space, right? And I don't know if anyone knows or have heard about meme coins, right? So meme coins are very volatile. Crypto itself, cryptocurrency, the likes of Bitcoin, Ethereum, and all of that, Solana, they are very, they are classified under high risk assets, right? Due to their volatility. That means a particular cryptocurrency can go as low as 90%, 95% in a day, right? Or as high as 2000% in few hours. So they are high risk assets. So, and if we are to relate it to the topic of today, right, uh, which says trading as a business, right, not a gamble. You do not really want to touch high risk assets like meme coins, coins that can go as low as minus 90% in 11 minutes, right? So you don't want to touch that, right? Because as I earlier said, trading is risk management, and risk management is trading. So you need to define your risks properly in order to make the maximum profit out of it. So the third slide says two roads, same market. So this slide shows that it's like a it's in tabular form, right? So the first aspect is the gambler, while the second aspect is the business owner, right? So when it comes to gamble, a gambler hopes. I don't know if anyone can hear me.
Yes, yes, for
All
sure.
right, all right. So when it comes to when it comes to gambling, a gambler hopes he sleeps poor and wakes up rich, right? And when you gamble, you have this adrenaline rush. You know, you just feel that adrenaline pumping. You know, your body rising, your head getting. You know, you just feel that sensation. You know, that's happy sensation, right? And then a gambler um gambles based on luck. A gambler hopes he's lucky one day to make it, right? And a business owner has plan, right? Uh, Businesses that are successful in the world, the likes of Coca-Cola, the likes of Dangote, the likes of UBA and Co. The CEOs have a strategic plan, right? And there's a process they follow, right? Uh, I watched this Tony Elumelu's interview. He explained how he bought a dying bank. He was the head of the bank as a CEO. Then he built a bigger bank and all of that. So there's a process, right? You don't just jump from 0 to 100, right? So and then there's an edge, right? As I earlier said, an edge is what differentiates you from you know the other traders, right? So and then there's discipline. You know, if for example Tony Elumelu, for every profit he makes monthly, his MRR, he keeps spending it. There is no way UBA would have been built today or would have you know keep running till today. So there is discipline as well, right? So that's what differentiates a gambler and a business owner. So I already said that trading is a business, run it like one, right? So, and Matthew 25, verse 21, it says, well done, good and faithful servants. You have been faithful over a little, I will set you over much. So you are a steward, you are not owners, right? And every trader is managing capital that ultimately belongs to God, right? We believe that everything we own is owned and given to us by God, and we need to manage it well, right? Um, so the talents were never the servants to waste. So we need to manage every single resources God has bestowed into our hands, and by doing that, we need to trade like a business owner and not a gambler. We need to be principled. We need to be disciplined. We need to follow due process and all. So and yeah, diligence over hype, which is the biblical principle too, right? The plans of the diligent lead surely to plenty, but haste leads only to loss. So I believe that the Bible is complete, honestly, right? If you read Ecclesiastes a lot and the book of Proverbs, your everyday life can be drawn out of it, right? If you apply every principle, on on Ecclesiastes and Proverbs to your daily life, you realize that your daily life improves, right? And all of these principles can be applied to trading as well. So you have to be diligent over little, so you can be blessed with more, and you need to also uh, uh, be Proverbs 21:5 says, "The plans of the diligent lead surely to plenty, but haste leads to only loss." So you need not to be hasty in making profit. So, and in most cases, most blown accounts were destroyed by bad analysis, right? They weren't destroyed by bad analysis. Sorry, they were destroyed by impatience, right? So if I will analyze my trading life so far, Most of the trades I see people, lose money a lot on, right, are trades that are taken while impatient, right? Okay, this is not the best time to buy this particular stock. Excuse me. But because you were impatient, you there is something called FOMO, right? Fear of missing out. For example, I don't know if people here, if there's anyone here that trades stocks, right? There are stocks that have been pumping, the likes of Micron, the likes of Nvidia, the likes of the which other one? A lot of them like that, right? And you know, BlackBerry and all. So there are levels. Sorry, I can't share my screen. I would have shown you a lot of things. There are levels at which this price is still going to crash into, but because you likely want to chase pumps, you want to get in, you don't want to miss out. You enter at the bad time. You have a bad entry, and that alone kills your trading account, right? So you need to have a diligent plan and you need to be patient. Patience wins in trading. Whatever financial instruments, you have to be patient enough, right? For there's this quote, there's this saying I often say, you have to wait for the markets to come to you. You don't chase after prices, right? So patience is required to trade uh, well, right? So your biggest risk is you. Markets don't move prices. Crowds of emotional decisions do, and you are part of the crowd until you train yourself not to be. So most of the time, especially when prices, moving up, you know, there are a lot of sentiments, you know, on social media. Oh, this is a stock you need to buy now. If you are not buying this stock at this moment, you are missing out. This and that, right? If you join that psychology, it is very likely that you are buying at the bad time. It is very likely you are buying at the bad price, right? So, um, all right. So, most, as I earlier said, right, if you join the crowd to trade, you probably buy the top, right, of whatever financial instrument it is, right? So, for example, Micron beats Meta, which is Facebook, and Tesla in market capitalization yesterday. So, and it was yesterday I started seeing people making tweets that, oh, this is the best time to buy Micron now. If you don't buy Micron, you'll be missing out and all. If anyone had bought when people were posting about it yesterday, you'll probably be down, not even probably, you'll be down at least 6%, 7% at the moment. So if you don't join the crowd to trade, you trade at your own discretion. You you make sure the market comes to you, before taking trades. So you don't just chase, the don't follow the crowd to chase, prices. Right. So what is an edge? I mentioned edge while introducing this topic to everyone. So an edge is a repeatable reason your wins over many trades outweighs your losses. So your wins have to outweigh your losses, and that is how you become profitable, right? A friend of mine uh, often posts on his WhatsApp status, but now I don't know if he's here. He says you can take 10 trades, right? And you lose five, you win five, and you are still profitable. So, and that's an hedge, right? So, an hedge is a repeatable reason your wins over many trades outweighs your losses, right? So, and there's a formula for that. Edge is equals to win percentage. That's the percentage rate of your wins times your average win minus your percentage loss times your average loss. So that is the formula for edge, right? And I wrote said that no edge is equals to entertainment, edge is equals to enterprise. So edge is an enterprise. So and you have to treat it like one, right? So and when it comes to risk management, I mentioned earlier that risk management is trading, trading is risk management. If you are not managing your risks, you are gambling. That is just the truth. So, and it is very, very important that whatever fund you are given to manage, either your personal funds or whatever fund is in your possession to manage, it is expedient for you to protect the capital first. That's your first responsibility as a trader. So, and the rule of every business is that you cannot compound capital you no longer have. So, let's say you start trading with $1,000, and you along the way you lost 95% of it. That means you'll be left with about $50 or thereabouts, right? For you to make back the $1,000, that means you need to trade the $50 20 times profitably, right, to make back the $1,000. So it is better to make small losses, cut your losses small, right, than to cut your losses when they are huge, and you no longer probably have an option than to cut them, right? So you need to cut your losses fast and small, right? You need to cut them small. So, and there is a general rule to trading: do not risk more than 2% of your trading capital. So let's say you are trading $1,000 capital per trade. You should not lose more than 2% of $1,000 is $20. I hope I'm correct, right? So that means you must not lose more than $20 on that trade. Right. If you start losing more than $20, you are going against the rule of trading, right? So on every single trade, you shouldn't lose more between 1 to 2% of your capital. So, and I'm going to explain something which is a drawdown trap, right? So if you lose 10% of an account, to make it back, you need to make a profit of 11%. So that means if you lose $100 out of $1,000, to make back the $100, you need to be in 11% profit. If you lose 25% of the $1,000, to make the $1,000 back, you need to make 33% profit. Can you see the disparity? If you lose 50% of $1,000, to make back the $1,000, you need an 100% profit, right? To make back the $1,000. If you lose 75% of $1,000, to make it back, you need a profit of 300%. If you lose 90% of your capital, to make back the capital you lost with that same amount left, you need a 900% gain or profit. So that means that, and that's the drawdown trap, right? You need to cut your losses fast and small, right? So now we are seeing risk management, and there's something called position sizing, right? Size the lever, right? So you don't need to predict the markets perfectly. You just need to control how much you lose when you are wrong, right? So let's say, for example, BlackBerry released their earnings reports this week, right? And before the earnings reports, it was just almost stable, right? And the earnings reports came in around 9 p.m. or thereabouts, 2 p.m. Yeah, or 2 to 3 p.m. Micron came 9 p.m. So fundamentals, and that's a fundamental, right? So and when it comes to fundamentals, um, they are the most solid way to trade. So when you know earnings report is coming and you are bullish about the project, all you just need to do is reduce your position. That's the position sizing I'm talking about. Let's say you have $1,000 in total of for your capital. You can reduce it to, let's say, $300, and then use 2% stop loss, right? Which is the risk management. And within 1 hour, uh, Micron pumped as much as 20% in a single candle, right? That's a good profit, right? So, uh, in case you are wrong and then your size is small, you can always bounce back with another trade. But if you are oversized, let's say you have $1,000 total and you use the entire $1,000 to trade, and then you make a lot of losses, to bounce back from that is always difficult. And once you start revenge trading, or you want to make this back by all force, by all, you eventually lose your entire capital. So that's how trading, that's how it works, right? So, and so I said I have traded across three financial instruments: forex, crypto, and stocks. Right. So, and for these three financial instruments, the same rule applies to them. You need to manage your risks. Very, very important. Right. And so you run numbers, not vibes. So you don't trade on vibes. As I said, one of the difference between a gambler and someone who takes trading as a business is that a gambler trades on vibes, trades on hope, right? While someone who takes trading as a business trades based on plan and process and discipline, right? So uh, you run numbers, not vibes. You take your profit and loss statements. You have a trading journal. You have your position and exposure log. So you can do this with Microsoft Excel. Just open a spreadsheet, right? Document your journey, write your daily profit and loss, write how much you are willing to risk to make a certain amount of profit, right? And then your risk officer is your stop loss and sizing rules. So you should have rules, right? You could maybe make a frame, put it on your trading decks or where you see it every day. Okay, maybe your rule is not to take more than one trade uh, per day, right? So, and you need to keep looking at those rules to keep you in check, right? So, you need to build the system. As I said, if you are trading as a business, you need to build a system that works, right? So a business that runs on a process outlives any single trade. So to build a system, you need to plan, right? You need to plan your trading, define your entry, right? Your stop loss, your targets before reaching your capital. So you need to plan. How much am I willing to lose in this trade? How much am I willing to make? Right? Just like every other business, right? There's no business with risks, right? So the second thing you need to do is to execute after planning. Follow the plan without negotiating mid trade. So along the way, you could be like, oh, this trade, I want to exit now. No, you need to wait until you know. Uh, you just need to follow your plan. So the third one is to journal, record every trade, outcomes, and reasoning. And the fourth step is to study your data weekly. Adjust the system, not the mode. So there are times that your trading data might not go as planned. You need to reevaluate and plan all over again. You know to see what works. So borrowing is profitable, right? uh, if the slower you compound your profit, the better. So trade what you can lose, risk what you can recover, and build what lasts. Right. So I often tell people that you should trade what you can lose, what you can afford to lose, and that is where risk management comes in. Risk what you can recover and build what lasts. So that's what I'll be leaving everyone with. Trade what you can lose, risk what you can recover, and build what lasts. So once again, my name is Oluwafemi Adeniga, and thank you so much for listening.
Thank you, Femi. Thank you so much for this, at least for granting our story to know. One thing we do at Holy Spirit Hub is that we through we preach Jesus, right? But through the message of Jesus, we also have influence, our sphere of influence, our spheres of influence, right? And finances is part of the areas where we need to definitely influence, right? So at least we have quite a number of persons that are following us that are also into trading, and this is YouTube. It's not like Google Meet. YouTube it to be there. So that means in
Mm,
2 years' time people can still watch it, 3 years' time people can still fall back to watch it, you understand?
yeah,
So
sure.
that's the way it is. So yeah, the more the view keeps increasing and all like that. So I don't know if anybody has any question. If you have a question, please drop in the comment. Some people are thanking you. Talabi Elijah said thank you so much,
Yeah, it's
right?
my
And
pleasure. Thank you for listening.
yeah, so if you have, I think let me ask a question, a very honest question. I don't know if you can hear me.
Yeah.
From my own end, I tried the crypto stuff, trading stuff, and eventually I kind of got tired, right? I think I lost some funds, right, personally. So, what would you say? What would you say is the motivation? Be the motivation for someone who has lost funds before in the crypto space or maybe in forex, right? What would you say? Um, you know, for me, I think I just lost the fund like overnight, and it was so painful. So I was wondering that is this what most traders go through? I said, come on, I'm not ready for this. It's better I do a business and I know it's not profitable for me. I understand. But come on, overnight I just realized everything just so what will you say should be a motivation for someone, maybe a newbie who trades and maybe lost everything and all like that. So
So, when it comes to crypto or whatever financial instruments it is, right, it is important to note that you cannot trade every day, right? You can trade every day, but you cannot trade every day and be profitable. That's the truth, right? And why you should, why you cannot trade every day is because you cannot always get the best setups in the market, right? For instance, I throughout this week I've only traded twice. I traded the Micron fundamentals, which is stocks, and I traded the BlackBerry earnings reports, right? And those are the only two trades I've taken this week, right? And they are profitable. So one thing about that I tell people, I mined my first Litecoin and Ethereum back in 2016, right? And we are in 2026. That's 10 years, right? Um, it is important to note that crypto, especially, can be volatile, and it's one of the things I said, you know, in the start of this call, right? So, for someone who has lost money, trading, one thing is the easiest way to lose everything you have, especially when you trade crypto, because I'm sure you lost money while trading crypto, right? The easiest way to lose money while trading crypto is to trade leverage, right? Personally, I trade leverage, right? However, I am very cautious, right? Very careful in the pairs I trade. And most importantly, I size my trades. So if I know, okay, I want to enter this trade with maybe a 3x leverage, I I size my position and I know, okay, this thing I just wanted to run, right? I size my position. Maybe I have a 10K account. I could use $500, 3x, set my stop loss and leave it to run. But most of the time, when some traders start making money via trading crypto, especially leverage, they tend to start increasing their leverage. Okay, you started with 3x, and then let's say you made $500 profit in a day, right? You'll be like, why can't I just use 20x? Why can't I use 50x? Before you know, you've blown the entire account, right? So, for someone who has lost money via crypto, right, especially trading crypto, I think you need to understand that leverage is your greatest enemy. So it's better to even buy spots. The reason why I'm emphasizing this is because last year, October 10th, even people that didn't use leverage to trade lost a lot of money. The entire crypto markets crashed. Most altcoins went as low as 95% in 15 minutes. You can never see that coming, right? And that is why I said crypto can be classified as a high risk, financial instrument. So that means you likely don't want to touch it, except you can bear the loss, right? I think the most stable financial instruments you want to, build wealth with uh, over a period of time is maybe stocks because stocks is less volatile. That's just the truth, right? So one thing first, you cannot trade every day and be profitable, right? Yeah, that's just the truth. So you have to, mark your calendar. Okay, I'm trading this day because of so reason. This day I'm not trading because there is no edge. I explained what edge is, right? So yeah, I just hope I answered your question.
Okay, there is another question here. I hope you can hear me. Right. The
Yes.
question says trading one's capital, which one is better between trading one's capital or trading a prop account? Which one is
All
better?
right.
And
So
also another person asked, oh, hold on, let me ask these two questions together. So also another question is which financial asset is best for beginners?
yeah, good questions. So I have traded my capital. I've traded prop account, right? So I think um, what our advice is, if you already have your hedge, right? So if you already have your advantage over other traders that you are keeping to yourself, that oh, this is my strategy. You already have your hedge, right? And you believe the hedge works, and you don't have much capital. Let's say, for example, now our breakout prop sells 50K accounts for I think $300. So that means with $300, you'll be able to get a $50,000 account. But the thing about prop firm is there are some of them that changes rules, along the way, and which I don't vibe with. But there are some that are cool, right? So um, if you can trade and pass the evaluations, maybe first and second phase. For some, it's just one phase evaluation. I think it's cool, right? I've traded prop and it's sweet. Right. I got a 10K account December. I just said, oh, let me just try prop since I've been trading my own money. And I was paid out about, was it $4,000 or so? I can't remember. So, I mean, but after then, I won't lie, I lost the account because you know, I think the stop loss, went over, and broke the rule, and then they took the account from me. So, but I made my 4K profit. So for beginners, the best financial assets, as someone who has traded crypto for almost all his 20s, I would advise you as a beginner to trade or invest in stocks. You don't want to, go through the risks of trading crypto as a beginner. That is just the truth from me. So believe what I'm saying. As someone who is experienced, buy stocks, right, and hold. You get dividends for holding stocks. So leave crypto until you are financially stable and you can, you know, and then Ecclesiastes says, you don't put all your it's not X now. So you don't put all your capital. Let me just put it in that. You get what I mean. You don't put it in one basket. That means you need to spread it, right? So you can just put a tiny bit into crypto, but the most of it should be investing in energies, company that the likes of uh, you know the Seplats, insurance, Dangote, Tesla, EVs, robotics, and all of that. Those are companies that will pay dividends, either it's the price goes up or down. So for beginners, it is best to trade stocks. Yeah.
Okay, thanks, Soma. Another question is what kind of mindset must one have when trading? What kind of mindset must one have when trading?
All right. So when you trade, I think every human being is born with emotions, right? So it is easier said to say, it's easier said to say when you make profits, you keep calm, you don't, show too much emotions and all. But the best mindset to have when you want to trade or when trading is, I am sticking to this plan, right? I have set before taking this trade. So, and I think it's default to have a winner's mindset. Don't be overly optimistic. Um you need to, as I said, plan, execute, right? Wait. The waiting time when you wait is when you mess it up, right? When you plan, you execute, and you follow your plan. So you should have a winner's mindset that, this trade I'm taking, I'm winning, right? But if you are not winning, your stop loss should stop you out, right? And yeah, so that's just it.
Okay, for you, you've advised that stocks is better for a beginner than maybe forex or
Yes,
crypto.
yes,
But I
sure.
see that I think yeah, but I think people make more noise. I think if forex people make more noise than crypto, right? So why is that? Let me just that's just my own question.
Okay,
So
can you come
why
again?
do people like forex guys make more noise than the crypto guys? So in regards to the so why
All right. So there are forex secrets most people don't know. There is something called CPA marketing. That's cost per acquisition. Right. That means if I use a particular broker, I won't mention any broker's name, uh, and I invite someone with my referral code per person, in as much as the person deposits, let's say $1,000 or so, using my referral code, I could get up to $500 in commission, right? So I am not saying forex guys who make noise don't make profits, but best believe that most of them make their money via commissions they earn, right? A good number of them make profits. They buy prop firm, they get funded up to $1 million, 250K, and all of that, right? So, but best believe most of them make their money through referrals, commissions, and all of that. So, and the only way to draw more people in, is to make noise. Rent supercars or buy supercars. Host lessons sessions, um, get more people in with their referral code and then commissions. Is that not sweet? So that's the secret.
Wow. Okay. Yeah. So last question. Someone is asking, how do one invest in stock? What app or site do you recommend for
All
stock?
right. So to invest in stocks, in Nigeria, I don't know if the person is based in Nigeria. If you're in Nigeria, you can use Bamboo, Bamboo. If you're outside Nigeria, you can use Trove, Trove. You can also use Trove in Nigeria, right? So on Trove, there are US stocks you can buy into, right? So, but Bamboo, you can also buy into, US stocks as well, but mainly NGX, right? Nigeria stocks. So, yeah, that's that about the apps.
Okay, but do you have any course or something in regards to stock investment? Someone is asking, he needs a full
So I don't
understanding on
have a
that.
course, honestly. However, I don't know if I should. I don't know if I want to teach stocks trading or crypto or anything at the moment. But I mean, I have an academy, right? If you are willing to join, I share a lot of insights, my thesis about stocks and all of that. So I mean, if you follow it, you make profits, right? So, but I don't really have a course or books to read about stocks. Right. So yeah.
Okay, so for everyone asking, you can just go to Crypto Crib, check out Crypto Crib online. So I think, or maybe I will also give maybe
Yeah.
if you can send the link to me, Femi, right?
Okay.
Maybe
Sure. Sure.
something. Yeah, yes. So I can send to anyone who wants to learn and like that. So they can also register through payment and all like that. So
All right.
yeah. Okay. So thank you so much. Thank you so much. It's really
Yeah.
great
Thank you.
having you. So, yeah, it's an honor. It's an honor. So thank you so much, Femi. Yeah. Yeah. Okay, so we'll be calling it a day. So thank you all for joining. So if you joined late, you can watch all over again, start from the beginning, watch, and if you have questions, you can drop them in the comment section. Maybe later when we check through, and I will send it to Femi. Maybe, yeah. So thank you so much, everybody. Thank you, Femi. Thank you so much. Yeah. Bye for now.
Yeah. Goodbye, everyone.